Welcome to Exponential Finance, where we connect AI, cryptocurrencies, and markets to help you understand what matters and how to act each week. Today, we present a very interesting analysis by Cathie Wood of ARK Invest.
You can feel it, right? I mean, everybody can. From stocks to crypto, the markets are just really on edge. And Cathie Wood says there's a very clear reason for all this nervousness. But, and this is the important part, she argues it's just a temporary storm, right before a really big shift.
So that really brings us to the main question here. We're going to unpack why ARK thinks this fear makes sense, for now anyway. But we're also going to look at why they're so incredibly optimistic about what's coming next. So yeah, let's dive in.
All right, first up, the problem. What's actually behind all this market anxiety? Well, according to ARK, their diagnosis isn't some, deep fundamental flaw in the economy. Nope. Instead, they're pointing to a pre-classic short-term problem, a good old-fashioned liquidity squeeze.
So the main issue is what's called a liquidity crunch. And really, in simple terms, it just means there's less cash floating around in the financial system. And what happens when money gets tight? Well, investors get nervous, especially in those high-growth areas like tech and crypto. But, and this is ARK's key point, they believe this is a temporary situation.
Okay, so where did all the cash actually go? It's a fair question. ARK points to three main things draining the system. First, you've got the Fed, and they're actively pulling money out through something called quantitative tightening. Second, the U.S. Treasury is basically hoarding cash instead of putting it back into the economy. And then finally, the Fed's own balance sheet is shrinking, which just tightens the money supply even more. And if you want to put a number on it, get this. The Treasury's general account is holding nearly $1 trillion. $1 trillion. That's more than $300 billion above what's normal. So just think about that. That's hundreds of billions of dollars that could be fueling the market, but instead it's just sitting on the sidelines doing nothing.
But here's where it gets really interesting. This is the counterargument. While the Fed is laser-focused on fighting inflation, ARK believes they're missing a much bigger story. They think the data is pointing to a totally different risk, one that's building up just beneath the surface. And that risk is deflation.
And this really lays out the central conflict perfectly. On one side, you have the Fed, right? And they are absolutely convinced that inflation is the #1 enemy. But then on the other side, you have ARK's analysis, and they're pointing to these powerful deflationary forces, things like technology, as the real story. They're basically arguing the Fed is fighting yesterday's war. And check this out, because this is probably ARK's most compelling piece of evidence. What we're looking at here is a comparison between the value of gold and the total amount of money in the economy. That's a measure called M2. Now, this ratio has only hit these insane levels twice before in modern history, once in the early 30s and again in the early 80s. And both times what happened next? A massive bull market kicked off. And according to this data, we could be right at that same kind of turning point right now.
And it's not just gold saying this, by the way. The bond market is flashing similar warning signs. You may have heard of the inverted yield curve. It's kind of a fancy way of saying that the market expects the economy to get weaker, not stronger. And historically, this has been a super reliable recession indicator. It really suggests the Fed might be squeezing the economy a little too hard already.
Okay, so let's recap. We've got a short-term money crunch, and we've got a central bank that might be overdoing it. So, where's the good news in all this? Where's the solution? Well, ARK believes the foundation for a massive boom in productivity and growth has actually already been laid.
The catalyst, they say, is a new set of pro-growth tax policies that are designed to really turbocharge American innovation. What this means, essentially, is that companies can now immediately write off 100% of their investments in new factories, in R&D, in new equipment. I mean, this is a huge green light for companies to start investing heavily in future growth, and to do it right here in the U.S.
And the result of these policies? It's pretty stunning, actually. They effectively lower the U.S. corporate tax rate to around 10%. Just think about that. That makes it one of the lowest, most competitive rates in the entire developed world. This could position the U.S. to be a total magnet for global investment and potentially ignite a massive productivity boom.
All right, the payoff. What does all this big picture macro stuff actually mean for Bitcoin? This is where we connect the dots.
So what's interesting here is that Cathie Wood is actually acknowledging that Bitcoin's role has changed a bit. See, ARK's original thesis was that Bitcoin would be this insurance policy against inflation, especially for people in emerging markets. But what really happened is that stablecoins came along, and they're now a massive market, and they've pretty much filled that role.
So you might be thinking, okay, does that weaken the case for Bitcoin? Well,
ARK says, no, not really. They do adjust their $1.5 million price target down a little bit to account for stablecoins. But, and this is a big but, they argue that the recent rise in the price of gold has actually doubled the size of the digital gold market that Bitcoin is going after. So you've got one factor pulling it down, another pushing it up, and the core bull case, it's still very much intact.
And this really brings us full circle. You see, crypto assets are incredibly sensitive to that liquidity squeeze we talked about at the beginning. But the crucial takeaway from ARK's analysis is that they believe this pressure is only temporary. They fully expect it to clear up, maybe even by the end of the year, as the Fed's policy starts to shift and government spending gets back to normal.
So that leaves us with this final question, doesn't it? If this short-term fear really does fade away, and if this massive productivity boom really does arrive, are we on the verge of a whole new bull market? ARK's analysis suggests we're in this exact moment, where all this short-term fear is just masking some incredible long-term promise. If that squeeze goes away and the tech boom kicks in, well, today's nervousness could just be the calm before the storm. To learn more and stay up to date with the latest in the world of Bitcoin, visit exponentialtom.com and subscribe to the channel.